Hey guys, hey, may pips be upon you. I decided to do a video update of that Euro Aussie analysis and idea I put out. Uh, was it yesterday or the day before? The reason being is that I was looking for price to start to weaken here, give me signs of exhaustion like it did here, and then drop. All right, we needed that confirmation on the. We needed to see that on the lower time frames, but those confirmations didn't come. It came for a short term gain, and some people actually went down to the 5 and 1 minute and got that trade in, got a nice short term short. But we were looking for something a little longer, right? Price found its footing here, found support and sprang up. So I think this deserves an update. Also, I received a question in the comments section by Pranay Kumar Reddy. He asked, "What's the long-term trend of Euro Aussie in daily and weekly from now on?" Now, I'm not sure what now from now on means because you can hardly say, "Hey, this is what it's going to be forever," but I can give a view of what the near future might look like. Anyway, so that's what I'm attempting to do today. Okay, so let's let me take care of this one first. Let's go to the monthly. All right. This is what we got to bear in mind. All right. I don't know how that got there. Okay. Now, you can see that we have a long term trend going starting from the 2012. We have a contact here, and you only need two to establish a trend line. Three is a confirmation for me. All right. So we have this long term trend. That's good. All right. So on the monthly, we are bullish overall. All right, but we need to look closer. All right. Uh, Mr. Reddy asked about the weekly and daily. Well, I'm going to tell you. On the daily, you can see we have this bullish momentum to the upside. That started on the 26th of February. You can't call this bullish momentum bearish. You just can't. We have bullish momentum. We have a bunch of higher highs and lows. So the trend on the daily is up. Uh, if we go to the weekly, same deal. All right. The trend is up since February, making higher highs and higher lows. Right. The trend is up. All right. We are breaking highs on the way up. These are the things you want to make note of. Breaking these highs. Right. We consolidate and then we break. We'll break out to the upside. All right. We consolidate and then we break this level to the upside. All right. That's how you know. Higher highs, higher lows, higher highs, higher lows. Very strong bullish candle here, right? But all of this is within the framework of the higher time frames. All right. Now we have an overall bullish trend, but what is the momentum here? All right. We want to know what the momentum is because that's very important. That tells us what the current state of things are. All right. You look at the overall, the big macro vision. What is the macro framework in which the lower time frames are working in? Okay. We peaked high here. All right. So we made the higher high here, but have we made some lower lows? Have we made higher highs since March? No, we haven't cracked that high. So what have we done? From here, we made this lower low, right? Higher high, lower high, lower low. It's that simple. All right. Now I'm stopping here. Why? Because anything that happens in between here and here, all right. Uh, let me, it's better to say it this way. Anything that happens between this lower high And this lower low is intermediate noise. All right. Until you break this major structure, these major structural points, all right, then you know if you have a momentum change or a momentum continuation. All right. Uh, if this one's important because this is the lower high, you break the lower high, all right, price manages to find its way to break that lower high like so, then your momentum is bullish. All right. But right now we are making lower low, lower high, lower low. Right now we are in bearish. We have a bearish momentum going on, even though the overall trend is still intact and up. All right. Now, because uh, this the low hasn't been penetrated yet, and we're still in the middle here, we have to say the last thing that was done was we made a lower low. And that means we're still bearish. The momentum is bearish until this lower low is broken. Uh, then we have to make a new assessment. And what would that be? Yeah, we would still be maintaining the bearish momentum. And that's what we're doing to this point. But how important would the breaking of this particular lower low mean? What would that mean? We would be breaking the overall trend, right? And that's very important. Once we break below here and retest and then come down, hey, it takes two lower lows and two lower highs to make a new trend. And we will be on a new downtrend, right? To this point, we would just be saying, okay, well, the uptrend may be over, all right, until we get the confirmation of a lower low, a lower high to add with this lower low and that lower high. We can't say we're in a downtrend yet, but once we do, once this lower high is breaks that low, then we have a new trend. Do you understand that? I hope you do. I hope I made that clear. All right. The importance of this lower high is once we break that structure, then we have a new bullish momentum. And what we need to see is uh, higher highs, higher lows, higher highs, higher lows. Are you with me? Good. Good. I hope I made that clear. All right. So that's on the master higher time frame. All right. This is the monthly. All right. And you just need to know that if you have this downtrend, right? Let me see. Let me get this. Let me do this neatly. All right. If this is on the monthly, just know that the weekly is going to look like this. Oh man, the weekly is going to look like this. A lot of noise, ups and downs. All right. But we're still working within the framework of the higher time frame. That's what the weekly is going to look like. All right. And guess what? Guess what? If you go down to the daily and you turn the red part, let's just say that's the weekly. This is what the daily is going to look like against the weekly. All of this is noise. But you just have to keep in mind what are the major structural points. These are the major structures. All right. These are intermediate structural points. They are highs and lows on lower time frames, but they are working within the frame of the higher time frame. I hope that concept is I hope I explain that concept uh, uh, well for you because I'm really trying here. If I can just get this, thank you. All right. So so when it comes down to what is the Euro Aussie long term trend, the long term trend is still up. All right, and it's still intact. We haven't broken it yet. And matter of fact, we have bullish momentum on the weekly and the daily. But, and this is what I wanted to stress in this particular video, because we made a, let me see, lower low here, right? A lower, man, did I just do that? I'm sorry. I didn't mean to take so long with this. If we make a lower high here, we make a lower low here, right? Because that's what we're doing, all right? We're still in between these points, and that means the bearish momentum is still being maintained until we break this structure, right? So we got that point. The bearish momentum is still being maintained here because we haven't broken structure to the upside just yet. All right. So we're watching this bullishness come into the market. The buyers are coming into the market here. All right, on the lower time frames, on the weekly and the daily, this is an uptrend. All right, but on the monthly, we're still maintaining bearish momentum. I hope you get the difference. All right, until we break this lower low here, all right, then we're going to be talking about thinking of a downtrend and the uptrend being broken. All right. Now, uh, I also want to make sure you see something else. Price is heading into a headwind because we made this lower high, we made this lower low. We're looking for this to either to where the reasonable expectation is that this becomes the lower high. All right, we make the lower high here, and then make another lower low. So we have the downtrend, lower high, and another lower low. That's what we're looking for. That seems to be the path it's on. I want to point out too, we are running into a bearish order block here. This is a monthly. It's pretty strong stuff. So I'm looking for price to come in here, and because it's basically untested. Yes, it was retested here. It was retested here. All right, but it's only been, that was a minor test. It wasn't like price came away, gave me the sunlight, gave me daylight in here. All right, we're talking about on the way out. It was tested, and price left aggressively. So we're looking for a reaction. I have a there's a high probability that we're going to get a reaction up here, and I'm going to be looking for this to turn over and roll back down so that we can continue the bearish momentum, making the lower low here, and maybe a retest for the lower high, and we can continue down. That should make sense because that's the logic of this the order flow here. We're heading into this supply zone, and the expectation, because of what price did the last time it was here, we're expecting that kind of rejection from here, and we'll see what happens on the lower time frames, right? And this should be a great long-term swing trade uh, downtown. All right. At the very least, we should be testing the trend line from here, and that's a lot of pips between there and here. Okay. At the very least, we should be testing this. If we only make it this high, right, and price makes a higher low relative to this one, then we can see that. Boom, boom. Come back and test that low, that resistance as support, and we're going ahead up breaking the supply zone. That's a whole different scenario. We're just looking at possibilities, probabilities, and potentialities. Okay, so I hope you get it. Let me know if I answered your questions in regards to the long-term trends and where this market might be heading. I hope you understand how to correlate these time frames. All right, you want to always check. All right, as soon as it hits here, I'm already going down to the lower time frames, and I want you to do so too, so you can get those exact entries. All right, I hate using the word sniper entries, but we're talking about having pips, stop losses between 2 to 5, at least under 10 pips for a swing trade. Now, you know, not too long ago, my swing trades would take 40, 50, 60 pips to get 100, 150 to 200 pips. We don't have to do that anymore. We, with order blocks, you can get precise. All right. And you can just inflate and magnify your risk to reward. And that's what it's all about. That's what it's all about. Yeah. We can get all into that, but take this, run with it, and I'll talk to you in the next video.